Hey guys, Boris Schlossberg from BK Asset Management and BKForex.com. Great to be with you. It's been a while since I've done any of these recordings because we've been obviously traveling all over the world, but this has been the first full week on the desk for me since we've been around the world, and I've had a chance to obviously trade the euro very heavily. Those of you who followed me on the FX Flow Twitter feed know that I've been pretty active this week. And one of the things that I wanted to share with you is not necessarily a strategy, but very much a practice, a behavioral set that I think is so important for most traders to appreciate, because this is a mistake that I think most common mistake that novice traders make, one that I certainly used to make over and over again, and that you pay for very, very, very dearly. Now, what I want to show you today is the chart of the euro dollar this week, which obviously looks like pretty much a one-way trip to heaven for those of you who are long. But what's important to understand is that when the week started and the euro was basically trading around 125 to 125.50, it wasn't at all clear that we're going to have a very strong rally. And the key thing, as a matter of fact, I think that you see in the beginning of the euro trade, especially on Wednesday, is tremendous amount of weakness. When we started out Wednesday night, we basically had weak Australian GDP numbers, weak Eurozone PMIs. We didn't really have any idea of what the Draghi press conference was going to be. And what you can see from the trade here is that the euro really went all the way down to touch the 12500 handle on Wednesday. Now, the thing that's interesting about it is that if you got short around these levels and you had all this foundational news behind you, the thing that kind of flipped a lot of people out was that the next hour, with absolutely no news, nothing going on, all of a sudden you had this massive vortex to the upside. And this is, I think, one of the most dangerous things for traders to ignore. When you have lots of negative news, but the price is going the other way, and conversely, when you have lots of positive news, and suddenly the price turns around and goes the absolute other way, the single most dangerous thing is to hold on to your outdated belief that price should be going down. Because what this is communicating to you is that there's a piece of news in the marketplace that you are not aware of, that something is going on outside of your domain of knowledge that is in fact the opposite of how you should be thinking about the trade. So in many ways, two things that you need to do. If you were short the trade here in 2500, you obviously had to stop yourself out at 2550. Once it broke that level, you had to respect the move to the upside. But the other thing I think for more sophisticated traders is that typically this doesn't happen a lot, but when you see this kind of a diversion between fundamentals and technicals, when technicals all of a sudden are doing something inexplicable by fundamentals, you need to trust the price flow generally. Now, of course, a lot of times you get rumors and you have lots of spike outs. It's not a guarantee that this is going to work. But generally, the key thing to do is first and foremost to cover. Secondly, if you want to be more aggressive, is to actually flip the position without even understanding why you're flipping the position, but because the price is communicating something important to you, to take the position to the upside and maybe take the long at 2550 here towards a move higher. Now, a long to this 2550 would have really worked very nicely here and would have had a very, very good vortex to the upside had you been able to take advantage of it. Because indeed, what was happening was that Mario Draghi was basically floating not necessarily a rumor, but floating the news that they were going to do a very serious Eurozone bond support program. And of course, that was the first piece of news that came out. The market then adjusted and went up. And then, of course, we had the press conference in which he explained it in more detail and effectively reaffirmed the idea that they were going to stand behind all of the Italian and Spanish sovereign debt. And then, of course, you had the positive reaction of the Italian and Spanish sovereign debt, and that created a further move out to the upside, which created a really, really big squeeze higher. And then, of course, today we had the U.S. NFP numbers, which everybody interpreted as being weak and therefore possibly more QE3 coming from the Fed. So you have this continuous move to the upside as you go forward. Now, fundamentally, at every single step here, you could have said, well, maybe not, maybe not. But the key thing is that what the price action was telling you, that definitely yes. And when you were having this conflict between sort of the unclear fundamental signals and the very, very clear technical signals, it's very important to err on the side of price action, because ultimately it's the price action that really drives your profits, not necessarily your interpretation of the funda. Now, understanding the funda does help you capture the context of this move as it went up. And certainly the one thing that you didn't want to do is be short on this move because in many ways the price action was very, very strong. But the critical thing, and this is really the most important thing, was to recognize when you're wrong. The price action was weak, you got short here, but suddenly for no reason the price action turned itself around. This is the single most dangerous point for most novice traders because typically what happens is what they will do, and I speak from experience because I've done this myself many, many times, is they will begin to add to their position. So you would add to your short here, add to your short here, add to your short here, and right over here is where you're going to get margined out because you've been stupid and stubborn enough. I guarantee you there are plenty of people here who are still short the euro, who are stubborn enough to think that it's eventually going to drop because, of course, the eurozone is horrible, and of course there's 1,000 fundamental reasons for why you want to be short the euro. All of those may be valid, but until and unless the price action confirms that move, you're going to lose your money before you're going to make your predictions come true. So that's why it's so important to pay attention to the price action, especially when it conflicts with the underlying fundamental thesis that you have going on. Because in a battle between price and funda, price generally wins. So with this, I'll leave you for next week when we're going to be able to trade a lot more of the flow trades and hopefully a lot more of the other swing trades. We're working on a whole bunch of new setups that I am very deeply involved in. Some of them with very crazy risk-reward ratios, some of them with very, very interesting price action flows behind them, and I'm going to be happy to share them with you in the next several weeks. Hopefully you guys have the best of luck at trading. I'm wishing you the best of the weekends. See you guys next week when we're going to have tons more event risk and hopefully a lot more good trades. This is Boris Schlossberg for BK Forex. Come visit us. Come visit me at Twitter on FXFlow, and come watch us on CNBC. Over and out.